Good morning and good afternoon, ladies and gentlemen. We'll just give it maybe another minute or two, just so we can have more participants, and then we can begin. Good morning. Good morning, everyone. Good afternoon, good evening, depending on where you are. We are just giving it a few minutes to allow other people to join, and then we can begin. Good morning, good afternoon, ladies and gentlemen. Welcome and thank you for joining us in this session on harnessing data for alternative digital lending models for smallholder farmers in Uganda. First, let me introduce myself. I'm Iris Kissiti, your host today. I'm a digital finance country specialist at UNCDF. In today's session, we will discuss how we can leverage data to catalyze access to credit for smallholder farmers in developing countries. We will hear from UNCDF and FAO about why and how they're supporting the pilot of alternative lending models and how more partners can get involved. We will also learn from the Uganda Development Bank Limited about how digital lending can improve access to credit and increase investment in agriculture. Finally, we will learn from Ugandan fintechs Ensibuuko and eMata on how they're using alternative digital lending models to advance low-cost credit to smallholder farmers. Allow me to introduce our panelists today. We have Jillian Ballet, economist, Investment Center, Africa Service FAO, Carlo Brovi, Senior Economist, Investment Center Division, FAO, John Emoy, Investment Manager, Uganda Development Bank Limited, Davis Agaba, the Chief Technical Officer for eMata, Gerald Otium, the founder of Ensibuuko, Chris Lokolio, the Digital Country Lead for UNCDF Uganda. Before we start, I would like to give some logistical details. This session is part of the UNCTAD eCommerce week and will be recorded, so you can always come back to it or share it with your colleagues and network. If you have issues with the system, please type in the chat and the team will try to help you. For your questions to the panelists, please use the Q&A function. You may also direct a specific question to a specific panelist, so please include that in the Q&A function as well. For the panelists, when you're speaking, please do share your video if you're able to. To give more context to today's discussion, I will talk briefly about UNCDF's work in promoting inclusive digital economies that leave no one behind. As you may know, inclusion in the digital era is not a given. As we work to support more and more people to use digital solutions in their day-to-day lives to improve their well-being, we're intentional about ensuring that digital does not lead to further exclusion of the most vulnerable ones. Our goal is to equip millions of people to use innovative digital services in their daily lives that will empower them and contribute to achieving the Sustainable Development Goals. UNCDF focuses on unlocking public and private finance for the poor in developing economies. As we will learn today, smallholder farmers are some of the most financially excluded people. They have no access to formal means to save, borrow, manage risks such as weather, pests, and diseases, accidents, market fluctuations, to mention but a few. Lack of access to finance makes farmers a lot more vulnerable to shocks and inhibits them from investing in improving agriculture productivity. Digital economies and innovations are providing potential means to tackle some of the challenges that farmers face. That is why we're piloting the use of digital lending models to access credit for smallholder farmers in the rural areas of Uganda. One of the things that COVID-19, sorry, I beg your pardon. One of the things that COVID-19 pandemic highlighted is the opportunity to use digital technologies to improve agriculture banking, especially for the underserved smallholder farmers. Carlo, how do you see digital technologies enhancing investments in agriculture and food industries for these smallholder farmers? Over to you, Carlo.
Thank you, Iris. Hope you hear me. Everything is fine? Yes. Good.
Yes, we do.
Good. Good morning, ladies and gentlemen. My name is Carlo Bravi, as introduced by Iris. I'm a senior economist in FAO Investment Center. And I'm going to give you, in my 4 minutes, and I'll stick to my time, I'm going to give you a little short overview of what digital technologies are now doing for small-scale rural finance, and how then, and these concepts will then be developed and go into more depth by the colleagues in the next intervention in the session. So digital technologies have been disrupting agriculture sector for the last approximately 2 decades, and this process has been accelerated by COVID, as mentioned by Iris. Among the various services to agriculture, rural finance is among the most impacted by this digital transformation due to high risk, low returns, and high transaction costs of reaching out to the small farmers. But digital technologies are starting to change this. Digital technologies are contributing to this paradigm change. The big data analytics and machine learning is one, digital payment is the other, and digital agriculture insurance through smart contracts, for instance. You might have heard data is the new gold, data is the new oil, or data never sleeps. This is all true, and we are producing quintillions of bytes every day. And these big data is characterized by what we call the 5 V's. There's volume, the sheer volume, enormous and growing. There's velocity, the speed at which the data is created, stored, processed, analyzed, visualized is up to real time. There's a variety, different kinds of data sets keep increasing. These include the structured and unstructured databases, devices, sensors, logs, social media, websites, posts, images, audio and video streams. There's veracity, the quality or accuracy of data is very important and plays a major role in extracting intelligence from these big data. And finally, there's volatility. That is the rate of change and life duration and obsolescence of these data, which is quite fast. So big data and artificial intelligence are helping small-scale rural finance, mainly by limiting the credit risk for financial institutions. This is done by producing a digital profile or credit scoring, we call it in technical terms, of clients based on the vast amount of data available. And these data for this risk profiling or credit scoring are mainly the transaction data from the client's activities, in the small-scale agricultural daily activities, input purchase, sales of produce, past loan repayment performance, but also geodata on specific features of the farm, size, location, crop and animal groans, time series data on rainfall, moisture, vegetation cover. But also these are the eyes in the skies. There are also sensors and drones that can be used in the farm to detect soil moisture, soil, and placed in stables for livestock and so on. There are digital water use and so on. There can be yield prediction capacity in all this. We can use, when we're using telecom call records to provide social, economic information on clients, and there are general agricultural structure and stats. Sorry. All this allows to define a reliable profile, what we call in technical terms, know your clients, KYC, and reduce the risk of lending. On the cost of lending of these transactions, digital transformation and digital payments are safer, faster, and cheaper than cash payments. And they are addressing the high cost of lending, the transaction of sending the money and getting the repayment. And the last one is crop-based insurance. Big data analytics and artificial intelligence are making it possible to reduce the risk of insuring rain-fed agriculture to a point that an insurance coverage can be placed or can be attached to a small loan. What we're going to hear from the presenters in these sessions are concrete field application of what I just described. What this agri-invest operation is doing is using a public-private model to test this digital technology in small-scale agricultural lending. And the partnership includes international organizations such as EU, FAO, and UNCDF, a National Development Bank, UDB, you will hear from them, You will hear also from the two private sector firms, Ensibuuko and eMata, who are providing the services, the digital services to UDB, and the most important actors of all, which are the small-scale farmers of Uganda. Hope that the condition of loans and small-scale agricultural production will improve. What we can say at this stage is that this is just the starting of the journey of digital transformation of small-scale agricultural lending. It is only, if you want, scratching the surface. More opportunities can be explored, such as using other sets of big data for digital credit scoring. We're using only a few data sets, a little potential, of the whole, of the full potential, adapting the algorithm to other crops and livestock in other areas of Uganda and beyond, but also making this digital credit scoring as a public good service, and making it accessible to all interested financial operators in a country or even beyond Uganda. And this is already taking place in countries working on this. And with this, Iris, many thanks, and back to you.
Thank you, Carlo, for highlighting how data can be used to customize interventions for smallholder farmers, and also thank you for setting us off for this discussion. One such intervention is the AgriInvest project implemented by the Food and Agriculture Organization of the United Nations and sponsored by the European Union delegation in Uganda. This is an initiative that is promoting access to affordable and relevant digital financial services for underserved farmers through a partnership with the Uganda Development Bank Limited. I will now invite Jillian from FAO to tell us more about this project. Jillian, over to you.
Thanks very much, Iris. Can you hear me well?
Yes, I can. Please go ahead.
Great. So first of all, I would like to start with a round of thanks to UNCTAD for the excellent organization of the e-commerce week. FAO, we are very happy to participate to the event. So as you said, as Carlos said previously, AgriInvest Uganda is a project financed by the EU, the European Union delegation in Uganda, and the FAO Investment Center, to which me and Carlo are part of. So just for information, the FAO Investment Center helps country to make more and better investment in food and agriculture to reduce poverty and hunger, improve livelihoods, and protect the environment. So Invest is a 3 years technical assistance project that started in 2020. So some difficult times operationally. And the project aims to support our good partner from the Uganda Development Bank Limited, UDB, to enhance its agricultural and agribusiness investment portfolio in Uganda and support implementation of its 3 high impact goals. Because agriculture ranks, amongst the top sector for the bank investments, and because it is a major priority sector for Uganda, the project AgriInvest has been assisting the bank, UDB, on different types of activities, including pipeline building agri-risk management, green finance, impact analysis, using big data, and digital finance, which is the topic of today's session. So when we designed the AgriInvest initiative, it came to our mind that for a bank like UDB, a national branchless development bank like UDB that wants to do more and better in agriculture, digital finance was a very interesting option. So in this context, FAO Investment Center, AgriInvest, UDB has been collaborating with UNCDF since day one on this project. Given UNCDF extensive experience in digital finance and collaboration with an ecosystem of fintechs and promotion of alternative lending models to boost access to credit for smallholder farmers in rural areas of Uganda. So in fact, what the project has done, it has been enabling dialogues and promoting collaboration between UDB and fintechs, Ensibuuko and eMata in its case, to deliver digital financial services for the underserved farmers, who are, as Carlos said, I mean, the most important actors that we want to support in this project, and for all the institutions involved. So I will leave it to my colleague from UDB, John Emoy, to really explain how digital solutions can be a game changer and being transformative from UDB's perspective, of course, and how it can support banks' aspirations to implement fintech solutions like those offered by Ensibuuko and eMata to really enhance lending to smallholder farmers. Over to you, Eris.
Thank you so much, Jillian. As Jillian has mentioned, one of the institutions that has been focused on increasing production and productivity of agriculture at farm level for both smallholder farmers and large-scale farmers in Uganda is the Uganda Development Bank Limited. Jillian has also mentioned, Jillian also mentioned earlier on FAO's partnership with UDBL on the agri-events project. John, could you please share with us some of the challenges that the Uganda Development Bank Limited faces when lending to, specifically to smallholder farmers?
Thank you, Irish. I hope the members can be able to hear me. Yes, thank you. So my name is Amoy John Peter. I work for Uganda Development Bank. I work for the agriculture unit. A bit about the bank, perhaps before I go into speaking about what you're asking me, is that for the audience that may not be aware of what UDB is, it's a development financial institution that is wholly owned by the government of Uganda. It supports the government in its aspirations to see how it can be able to transform the economy by providing funding to what you call priority sectors. And the priority sectors in this case, agriculture is the most top one, which has a lot of interest in the National Development Plan and even within the bank. Currently, I think our book is over 45% of agriculture, and agriculture is doing well. Now, if you look at what we're doing, the interest of the bank is basically to see how it can be able to turn around agricultural production and productivity in this country to make it more viable for everybody. Now, looking at the nature of agriculture in this country, you notice that there is a host of a big number of Ugandans who are involved in agriculture at the lowest level. Those are the ones we call the smallholder farmers. And they contribute quite a substantial in terms of agriculture production and productivity, exports, and the others. And it's very unfortunate that a majority of them seem to be having a lot of challenges in terms of access to support services that can be able to boost up their work. And as a development bank, we are therefore indicted to make sure that we come up with a solution that can be able to support them. Now, if you look at our journey through how we've been able to work with the commercial, with the smallholder farmers, we've been like any other financial institution, we've been able to have quite a number of challenges associated with that. The biggest being the fact that there are high costs associated with dealing with this category of persons. They are spread around the country, small in nature and sparsely allocated. So it means that you need to have a lot of ability to supervise and manage them and be able to be at their doorstep all the time to make sure that they support in the production and make sure they do the perfect work. Now, with that, it comes in with a lot of costs associated with it. And that's why you see in the financial sector, especially in the banking industry, you find in terms of the rating on lending to such persons, there is a lot in terms of costs that the banks associate to that, and which is a big problem, retarding how much they can be able to access and also affecting what would be their earnings at the end of it all. The other issue, of course, that comes with that is we're dealing with persons who have low capacity. Capacity in the sense that you do not have sufficiency in terms of bookkeeping, that you cannot really get data associated with the previous seasons of production for you to make a meaningful decision on the next course of action on how to support them. Capacity in management, that they cannot really be able to look at their business as well and manage in the right way. Capacities in terms of the ability to have the technical know-how of doing production of whatever they're doing. So around that is where you find that a big challenge on the side of the banks, including Uganda Development Bank, that you have to support in capacity development areas where possible, to see to it that you can be able to come through to terms and give them support. And that's a big issue. The other, of course, given the nature of our country, and agrarian, but also quite challenging in terms of how our value chains have been developed. Well, quite a lot in terms of the breakdown in our value chains that you do not really find a clear line in terms of the connection from one player to the other along the value chain that then can easily support production and even financing. And the breakdown in those value chains affects how much you can be able to offer in terms of credit to such categories of persons, and therefore it limits your access. And of course, that brings in the challenge in terms of how much you can be able to reach out to. So it's a big issue. The other, of course, looking at them association in terms of their ability, to secure their financings. It's a big problem that banks face, that you cannot really get very good in terms of ways of securing the lending to them. Yeah, they do not have registered properties that you can be able to attach to in terms of giving them a sufficient loan. So you're limited in terms of how much you can offer, because you definitely do not wish to see how you can spread your risk so high, since you don't have a clear and an authentic and good fallback option, which really limits your interaction with it. So which is a big problem for us at the bank, that we're really challenged to see how then can we do this. Now, perhaps I can touch to see how technology can be able to help in terms of seeing how to reduce some of these problems. Over time, with the fact that we have an indictment, find out solutions and how we can be able to break the barriers and bring in solutions that can enhance access to credit to this category of persons. Of course, we have a very good partnership that we've developed with FAO and UNCDF to see how we can be able to come up with models that can now be applied to reach out credit to such persons. And it's something that is helping us. First of all, is one that is going to be able to bring in financial inclusion, because all through with the challenges that we cannot be able to reach out to everybody, and also the fact that they have challenges associated with securing the lendings or opportunities of access to finance. Technology is one key area that can help do that by enabling us reach there. Because as a bank, we wish to see how we can be able to reach out to all the smallholder farmers across the country, the women and the youth, as well as the far-rich people. So it's technology that we're now trying to build as an option of how we can be able to reach out to that. And it's something that is actually helping us. I can tell you that today we are working out 2 models that can be able to enable us to reach out to most. And we expect that if well implemented, we will be able to have maybe 1 million or more in terms of beneficiaries of this in a few years to come. And that is something that Uganda Development Bank will definitely be happy to develop and put it out to the country to use. And the bit again that you need to understand is in terms of outreach, technology is a key area that is helping us reach out there at a minimal cost. I already mentioned to you earlier that lending and to this kind of categories of persons has a big cost. Now, the fact that you can be able to support lending within particular location without necessarily having a lot of mobility by going down there is a big welcome. And for us as a bank, it's one thing that we see technology helping us to do, to reach out to the far people and also touch to the persons that really need to see how we can be able to help them, the women, the youth, and the smallholder farmers across, which is really something which is good for us. The other, of course, coming into the fact that you're collaborating and bringing in all the other actors in one play. As you know, that agriculture is quite said to be risky, but to de-risk this further, the fact that technology can bring in the other actors in one place, the insurance companies, the buyers of the products that the farmers are doing, the extension service providers, is all a welcome note in terms of seeing how best to de-risk this, which is really something that we are doing. And it's something that is going to be able to enhance how much you can be able to reach out to these smallholder farmers. I mean, quite a lot that I can share, but I can end it here for now. Thank you.
Thank you, John. I think you've given us a really holistic picture about the challenges these farmers meet. And I'm sure we'll get back with more questions during the Q&A session as well. So all the speakers have mentioned alternative lending models and how they might be game changers for access to finance for smallholder farmers, particularly in developing economies. We will now have the opportunity to hear from the fintechs on some of their alternative lending models and how they're working. From Ensibuuko, Gerald, can you share with us the digital model that Ensibuuko is using in Uganda? Thank you. Over to you, Gerald.
Thank you very much. It's a pleasure for me to share our model in Uganda for digital lending to smallholder farmers. My name is Gerald Otim. I'm the founder and CEO at Ensibuuko. And it's been a privilege for us to partner with UNCDF, FAO, and the Uganda Development Bank to test this model for rural farmers in Uganda. Just to start off, I thought I could share with you a video from the ground, where you could get to hear from some farmers, that have been able to benefit from the inaugural digital loans that, we disbursed to smallholder farmers in northern Uganda.
Gerald, the sound, can you maybe restart with the sound, please?
Okay.
My name is called Oyaramoe, Chairperson Ayala Parenting. Ayala Parenting is a group located in Migweng, a little town council, Kwale district. We have 32 members in the group. We got loan, digital loan. Ensibuuko is give us that loan 7 million. It's give us just through phone within about 3 days only. But the bank, if you want money, it's not easy.
With the company of Ensibuuko, they don't need anybody to buy that going up from here up to town. Company of Ensibuuko, I want to encourage you that please don't think that your money will get lost anyhow, because we have made the use of it. When you go to our garden, you will see that everything is there. Okay, the soybean is now growing up.
My name is Ajok Lokas, one of the members in Ayala Parenting Group. We got a loan from Ensibuuko, so that loan helped me to plant the soy of mine. I plowed it also. So after some 3 months or so, I will sell my soya. I will pay back the loan. If I pay the loan, the remaining money will help me to take my children to school, and others will help me doing anything. So this is how Ensibuuko have done to me.
But in Ensibuuko, just only 3 days, it give us money through the phone. You want to request money, loan, you request to the phone. In Ensibuuko, is not need anything to say, we want your Untitled, or you want your what? In Ensibuuko, you don't want. It just give you a loan.
Thank you very much. I'll now share my presentation just so I can walk you through what the actual model is in Uganda. But to start off, I just want to tell you a bit more about Ensibuuko. We are a fintech based in Uganda. We focus on we are establishing a digital infrastructure for rural financial services in Uganda, working specifically through village savings and loans, cooperatives and associations. A few months ago, we started partnering with Uganda Development Bank, FAO and UNCDF to pilot a new model for lending to smallholder farmers. And our model was mostly hinged on savings and loans cooperative associations. These are, for those of you that might not know, typically in Uganda and in most of Africa, communities that have no access to formal banking services or have very limited access to formal banking services self-organize themselves into savings groups and savings cooperatives, and they start to save money together, and from that pool of money they start to provide each other affordable credit. But most times, the funds available for them to provide credit is very limited, and they look out to external funders or financiers to bridge the capital needs that they mostly have within the rural communities. And this is really a problem that we wanted to address. And I will just walk you through very briefly around what our model was and the key components of the model itself, and what has actually led us to be able to successfully pilot these digital loans for smallholder farmers. So the model really for us, starts with what I prefer to call agency and partnerships that de-risk farmers. It's really important to understand that a lot of the farmers that we work with are in very remote rural communities. They are disaggregated, they're not organized enough. And as a farmer or as a group of farmers, they don't have the resources, the connections, the networks, and the collateral to be able to find the right partnerships for themselves, or even to negotiate good terms on their loans. So we take the responsibility to do this. And it started with a partnership with the Uganda Development Bank. As John might have said in his presentation, the Uganda Development Bank has a mandate to finance key development sectors, including agriculture. And smallholder farmers is particularly a market segment of their interest, but they have had challenges reaching these farmers because they are spread out, disaggregated, and very small. So we take on that responsibility and partner on their behalf. But we also partner with other organizations. We partnered with a crop insurance consortium here to explore models that we could further de-risk the loan for smallholder farmers by bundling it with crop insurance. So we now have a partnership with 12 insurance companies that have come together to design a really unique crop insurance product. And I'll describe to you exactly how this works for enabling access to digital loans for smallholder farmers here. And then we organize and aggregate the smallholder farmers by targeting savings groups. So we work directly with savings groups, and through a single savings groups, we have the means to reach 25 to 30 farmers. And these savings groups are organized enough that we can provide them a platform that enables them to become visible, make their data and their operations visible enough so that people can trust them and can provide credit to them. And then we leverage on social collateral, which is really trust and networks. Savings groups have been a proven model for social collateral. Social collateral is really a means for you to disregard traditional collateral that's mostly based on physical assets, and leverage on mechanisms within a community that allows people to self-guarantee themselves. So the way it works is that individuals apply for credit and they repay their loans directly to their savings groups. And then the group borrows digitally from Ensibuuko and repays directly to Ensibuuko. The group guarantees every loan to individuals that are within the group. So we don't have to really worry about how is a farmer going to repay their loan, because the group of 30 guarantees everyone that's taking a loan. And this model has worked broadly across Africa. Savings groups have proven to be a very successful model for providing affordable loans, and it's a very, very low risk model. And we're leveraging on this model to further give smallholder farmers access to affordable and relevant financial services. And then we digitize existing financial data. So traditionally, smallholder farmers are invisible. They are not part of the mainstream financial sector, and they don't have bank records, they don't have a credit history. But the truth is that there is a lot of financial data about smallholder farmers that actually exists out there. And savings groups is a very reliable place to find that kind of data, because in savings groups, they save money, they access loans, they repay their loans. And that kind of data is very useful in informing a lending model to smallholder farmers, and also really allows you to be able to determine the credit worthiness of a smallholder farmer, but also gives you insights into their behavior patterns and their income levels. So we provide a digital platform for savings groups that digitizes their existing operations. On this platform, they can profile their members. They use the application to manage their individual credit and individual savings data. And they also use the platform as a utility for their weekly meetings. Every time they literally record everything within their meeting on this application. They record attendance records of their members, their meeting minutes, their welfare collections, their savings collections, the loan disbursements and loan repayments. And this is very good data that we can use to actually provide credit to smallholder farmers. So this is what we do with the savings group. So what you see there on the right is one of the group leaders that is now transcribing data that previously they had on a book, on a smartphone application that we provide them. And by doing that, we allow them to build a credit history and to have reliable financial data that can give them access to financial services from the mainstream sector. And then we leverage on this data to provide what I call paperless loans based entirely on data. We pre-approve a group for loan based on the existing data on the platform. And our model is based on two main factors. One is financial scores, and the other is behavioral scores. And then we allow the group to draw down the money to a mobile money wallet, which really lowers the cost for them to access the loan and eliminates a lot of the traditional costs that have existed with traditional financial services. And then we bundle the loan with index weather insurance that allows us to fully de-risk the loan in case of extreme weather conditions. So every smallholder farmer that takes a loan from a savings group now has that loan already insured against extreme weather conditions. And should they experience any of those conditions, the insurance company covers a certain percentage of what the cost of the loan was to them. So yeah, that is really our model in brief, and I'm happy to share more information and also to answer questions. Thank you.
Thank you, Gerald, for taking us through the Ensibuuko model. We will now hear from another fintech. eMata is currently using digital lending in the value chains, different value chains like dairy, maize, and oilseeds. Davis, how does the eMata model work? Kindly be brief, please. Thank you. Davis, you're muted. Please unmute.
Apologies for that. Yes, so like I mentioned, I'm Davis Agaba, CTO of eMata. And eMata is a Ugandan fintech, and our aim is to become the largest bank for farmers in Africa. We're on a mission to provide digital and affordable loans to farmers, and we all know the challenges that farmers are facing, especially when it comes to finance in agriculture. I mean, it has already been mentioned by the previous panelists. Now, I'll go straight to the model. How does that model work? First, we get the data. And as you can see on my screen, I'll explain how we do that. Second, we turn data into credit limits, and then we provide the digital loans to farmers. So for us to get the data, we first partner with middlemen in agriculture. These are usually cooperatives for dairy and aggregators for most of the crops that we have here in Uganda. And we offer them a free system to digitize their operations. This system does different functionality, from registering of the farmers, from providing inputting deliveries that the farmers make, and deductions that may be, or advances that the farmer can take up, as well as process their payments. Now, this data is very fundamental for us. And like John mentioned earlier, it was the first challenge we encountered when we started out. So with this data at hand, we can then use it alongside other data points, such as weather data, to come up with tailored credit limits for each individual farmer. Now, once we have all this information in place, we have the data, we have the credit limits, we're in position to give out the loans to the farmers. Our entire lending process is fully digitized. And this means that from the beginning to the end, so from the start, as you can see on my screen, when we're providing the loans, we use WhatsApp. when we are processing the loans and we know that the farmer is valid to get a loan, we send the money or disperse the money to his or her mobile money number. So there are, of course, instances when the farmer doesn't have WhatsApp. And in that case, we usually encourage them to go to the cooperatives or aggregators. And this actually helps them to complete any KYC that might have been missing, as well as actually a request for a loan. Now, we have actually seen this model work, and this is actually evidenced by the high repayment rate, which currently stands at 95%. Thank you.
Thank you, Davis. Maybe to follow up, how does eMata intend to scale this model, particularly to cooperatives?
Yes, thank you, Iris. That's actually a very good question. So we actually built scaling up from the beginning. And the way we did this was in primarily two ways. First, we actually, because we digitized the entire learning process, it helps us save cost and time. Now, traditionally, we've already heard it from the different panelists that traditional lenders, the learning process is practically manual. From the point when you request for a loan, the point when you disperse the money, all this involves different people on different steps, and it actually takes a lot of months for the loan to be processed. But like I mentioned earlier, we digitize the entire process, and instead of months, we're actually having a loan being processed in minutes. The second way is through the middleman that I mentioned earlier. Now, by working with cooperatives and aggregators, we take advantage of the existing structures in the ecosystem that the farmer is familiar with. And going out each single farmer would ideally be very cumbersome. I think it has already been mentioned. So using aggregators helps us cut costs and strengthen the ecosystem. Now, I must add that we actually have a small impact team. This small impact team goes out to train the cooperatives and aggregators. It also allows us to keep a finger on the pulse and catch any problems that our model might not have encountered, or maybe at least before something gets out of hand. So we think this is the key that we have set up for scaling up.
Thank you, Davis. I think that really explained how this model can be scaled up. I think at this time, I would like to thank all the panelists. We're now going to take some questions. Please, all our participants, feel you can share your questions in the chat section. But to kick us off, John from UDBL, how do you see the digital lending enhancing the capacity of UDBL to lend particularly to smallholder farmers, and in the long run, de-risk and increase returns on your agriculture lending and investment portfolio?
Okay, so as I hinted earlier, digitization is one of the core models that we're trying to take up as a way of how to reach out credit to the smallholder farmers across the country. This is something we see that is going to help us more in terms of reducing our cost of operations, given the fact that we will not be able to have a lot of physical involvement downwards. As you're aware that as a DFI, you may not be able to have branches, across every part of the country to be able to reach out this kind of business. But digital technology is one way that is going to be able to enable us to do that. And just not for UDB, but we're looking at it as the whole financial sector, banking sector, to be able to adopt to this, because this is one of the core reasons why you find that access to credit is a problem to such persons, and also the cost of it as well becoming an issue. So it's going to be able to be core in helping us reach out and also reduce the cost of doing business. The other is that digitization is going to be able to help us really in de-risking the business itself. As you heard from Ensibuuko in their discussion, they bring in key chain actors, insurance, extension service providers, and others on board. And that's the type of collaboration and partnership that is relevant for us to really have, a well de-risked kind of a credit sector. When you have it de-risked, it means that in terms of you pricing, risk premium, and others will be at its lowest, since you'll be able to have ability to reduce and see your risks at a lower end. So this is something that to us as a bank, we see digitization going to be able to do. And the other is in terms of course, enabling us to to reach out, to the mass different parts of the country, which definitely will be able to be very relevant in terms of agriculture is concerned. So in a nutshell, digital approaches are one option that we're trying to look as a solution to help us reach out to these smallholder persons as that kind of game changer that is going to be able to be relevant. I can tell you that once we implement the two solutions that we're trying to develop right now, it's not going to be a solution for, say, UDB. It's actually for the national, because we're just trying to push the light in that dark area. So once we're successful in this, it will be something that the whole agriculture business will be able to take up to. And picking, say, from the examples, if you look at across Kenya, you realize that there is a lot of success in terms of credit using the digital platforms. You hear about, maybe for those who have been able to have heard of Mshwari and others, these are all digital platforms that are being used to reach out to these persons, and that's what we're trying to develop here. Thank you very much.
Thank you so much, John. Well, we have some questions in the chat. So digital lending in the region has been linked with negative impact on the customers due to issues of cost and challenges of repayment for most low-income earners. I think, Gerald, if you can help us address this, how are the two models dealing with this? How is your model dealing with this potential issue?
Yeah, thank you. Thank you for the question. So it's true that cost and repayment challenges is actually a big deterrent for players that want to provide financial services to rural smallholder farmers to do that. Our model deals with that in two ways. One is that we don't target one farmer at a time. We target groups of farmers. And like I mentioned earlier, our model is really hinged on what we call social collateral, which means that the group guarantees every single loan that the farmer takes. What that typically means is that if one farmer fails to repay their loan to the group, then the group repays the loan on behalf of the farmer. And the group already has mechanisms to ensure that they collect that money, which eliminates the issue of collection challenges that usually occur with lending smallholder farmers. But also, I think broadly in terms of cost, digitization significantly lowers cost. Like you might have seen, cost is really in two ways. There's a financial cost and time cost. And the video that I shared attempts to illustrate ways that we're able to save farmers from both time-related costs and financial costs of accessing credit. Leveraging on mobile money is a simple way to improve access and lower the cost of transactions for smallholder farmers to access credit.
Thank you, Gerald. Davis, if you could please share on what criteria you use to identify the farmers for your model. Did phone access and ownership determine farmers' participation?
Actually, not really. What criteria we use is, like I mentioned earlier, is we go through the middleman. The reason why we do this is because the farmers are often in close proximity with the middlemen that they work with. And the second criteria that I can add is, of course, the data. Like we mentioned earlier, we do not provide collateral because the farmers, we don't ask for collateral because the farmers don't have collateral. These farmers will not have statements or salary statements that have been needing. So the work around that is to look at the farmer's history and relationship with the aggregator or the cooperative. And once we have that in place, and once we run the credit limits and identify how much a farmer can take, then the farmer is able to come either to us or through WhatsApp to actually get a loan. So that's the criteria that we follow.
Thank you, Davis. Maybe another question to Gerald. What are some of the early lessons from using this model?
Thank you. Well, I think the early lessons so far, and it's really quite early for us, but what we've so far learned is that access, because we all talk about digital inclusion, and digital inclusion is really how do we encourage, smallholder farmers, for example, to go digital, to digitize their records and digitize their processes. And we've learned that, digitization is not really the end. Digitization is the means to the end. And I think for a lot of fintechs and tech companies generally, we focus a lot on the means without thinking about the end. And for us, providing digital credit, which is really a new service, for the last 5 years, we've been focused on digitizing savings groups. And we've learned that, throughout the years, that there's really a lot of challenges getting farmers to commit to digitization. Because for a farmer to commit to digitization, they have to see the end. And credit for us has proven to be the end. That if a farmer can anticipate accessing credit affordably, then they will get incentivized to digitize the operations. So it's really important when we talk about digital inclusion to think about these two components. How do we facilitate digital inclusion? How does digital inclusion provide benefit to a farmer? And for us, that's a really major learning, and it's completely shifted how we think about the business and what our actual value proposition is.
Thank you so much, Gerald. There are really good questions in the chat, but this is the time we had to take questions. We're going to share the contacts of our panelists in the chat. However, we'll also try and respond to the chat. Maybe Gerald Davis, some of these questions are addressed to you. If you can kindly share, try and respond to them in the chat, that would also be helpful. Thank you again to our panelists. I'll now allow me to invite Chris from UNCDF Uganda to share the closing remarks. Over to you, Chris.
Thank you so much, Iris. Many thanks to UNCTAD for organizing this really useful forum. And many thanks to our panelists. I think that sometimes it's so much easier to talk about what you've done, but I think for us to be able to bring these partners to talk about what they're doing and the video from the people in the field is very powerful. We're also very thankful to FAO, the partnership on this and other projects is really useful. Just to let members know, UNCDF is implementing a program on leaving no one behind in the digital era. We're really trying to approach from a market systems development approach to build inclusive digital economies. Many of the people that are being discussed in this forum, rural farmers, many of them women, many of them youth, many of them refugees, are really in danger of being left behind. And so when we harness digital technologies to find innovative ways to extend credit, to help them to increase their productivity, their efficiency, and their well-being ultimately, it's indeed in an effort to ensure that we are harnessing technology, we're harnessing data to ensure that no one is left behind in what's really a digital era. So for us, this is very meaningful work, and we call upon you. We call upon our different partners, we call upon different stakeholders in the development world, in the private sector, in the public sector, to join us in this fight. Because I think that if we can ensure that no one's left behind, we can ensure that there's inclusive development for all. And so for us, this is very meaningful, but we are very thankful for this forum, and we invite collaboration, we invite partnership, we invite resources to work together to ensure that indeed we're serving all Ugandans and all other countries in similar circumstances. Thank you so much.
Thank you so much, Chris. I think this brings us to the end of our session. Before we continue, maybe before I close, can we have all the speakers turn on their videos just so we can take a group photo? Thank you very much. I think that's done. Yeah. So thank you so much again to all our panelists, all our participants for joining us today for the discussion on harnessing data for alternative digital lending models for smallholder farmers in Uganda. This session has been recorded, so you can always come back to it and share it with your colleagues and network. Thank you very much and have a good day.
Thank you. Thank you all. Bye-bye. Thanks.
Thank you all. Goodbye.
Thanks, everyone. Bye.